Today, we're going to talk about cash secured puts. This is not to be confused with buying puts. Selling puts is very different and is a moderately bullish strategy. As long as the stock does not crash when you sell a put option, you collect passive income by holding the position all the way until expiration. I don't close selling a put option so long as the stock stays above the strike of the put option that I've sold. But why is selling puts my favorite option selling strategy, and how can you pick the correct strikes, dates, and stock to sell cash secured puts on? This is going to be an awesome video on generating consistent income from someone who has made $591,000 in 2021 trading options. So let's get into it. Hey everyone, it's Henry. I worked for Goldman Sachs in an option hedge fund on Wall Street. Now my mission is to teach option trading and help everyday people make more money so they can travel more, fund their passions and their dreams, and just not be broke anymore. So basically, I'm gonna show you how to make some money with Uncle Henry. The foundation of selling a put option is selling to open a put contract. You may be familiar with buying to open a call option or buying to open a put option. That's when you see a stock that you think will rise or fall, so you buy an option and bet on it rising with a call option or falling with a put option. You spend money and no longer have it in your account, but now you have an option in your account. Over time, you hope that that option you hold goes up in value. With selling a put option, you hope the stock stays stable. With selling a put option, you actually sell something that you don't own. You have a negative position in your account. You're writing that option and selling it to someone else. You're literally creating it out of thin air. As you open up a sell put position, you collect the premium of selling that put option. Very different from buying. You get paid the premium and it enters your account instantly. Now you just have a negative position in your account. Now this option position may be expiring in a week or a month. Although you collect the premium, it will not look like that in your account because the option in your account will be showing a negative value. That's because if you were to buy it back, the put option that you sold, it would be worth exactly what you sold it for in premium. The way you make money is by this option becoming less valuable and decaying over time. As the option gets closer to its expiration date, it will keep losing value as long as the underlying stock doesn't fall. I'm going to show you an example in a minute, but look at this chart that I made for you. All right, guys, so let's look at an example. Right here, I'm going to show you a visual chart of how selling a put option works, exactly how much profit you make. And I'm actually going to compare selling a put option to being a stockholder because so many people don't understand that selling put options is not only way better than owning a stock, it gives you income, it's also safer. Let me show you all three of these. First of all, let's just start off with the stock. Let's pretend Apple's stock is exactly $100, okay? So if it's $100, the stock chart is going to be right here. If it goes up to $110, well, and Apple's going from 100 to 110, and now the profit, this is your profit right here. This Y chart is your profit, and this X axis right here is your price. So right here on the X axis, we have price, and here on the Y axis, we have profit, right? So on the X axis, when this stock goes from 100 to 110, you now have a profit of $1,000 if you own 100 shares, right? And if it goes down by $10, basically if it goes down to 90, well, it's going to be negative $1,000, okay? So it's gonna be right here, little circle here, and then we're gonna connect the dots, all right? If it goes down to 80, of course, now it's gonna be negative 2,000. So basically it keeps going down like this, right? And if it goes up to 120, it's gonna be a $2,000 profit, 130 will be a $3,000 profit, and so on. So basically this is a stock chart, very, very easy. Okay, now let's talk about selling a put option. Let's say that we have an Apple put option. Currently the stock's at 100, and we actually want to sell exactly the 100 put option. So we say, hey, I don't think Apple is going to fall any lower than 100. In fact, I believe that Apple is going to go up a little bit. Let's say 101, 102, whatever, right? We're going to be selling the 100 put options. I'm going to write right here, 100. So now let's say for this put option, we're actually collecting $10. So I'm going to write right here, $10. Now this is going to be really important. This is the premium that you are collecting. So once we have collected $10, think about where it's going to actually start. So Apple's currently at $100, okay, the stock. But if you start off this put option at $10, when the stock is at 100, you actually have a $10 profit, which for an option, because it's 100 shares, is $1,000. So you actually start right here. So a stockholder starts right here. He needs the stock to go up. But as a put seller, you actually start off right away with $1,000 profit. And this option is going to expire in 90 days. DTE stands for days to expiration, okay? So 90 days until expiration is where this option will expire. So you start off with $1,000. Now, here's the upside of a put option. Let's say that the stock falls down. It actually falls down to $90, okay? As a stockholder, you're falling, right? You went from $100 $10 to 90 and you're at $1,000 loss. However, because we have pulled in $1,000 as a put seller, when it actually goes down to 90, it goes down right here because you're down $10, but you collected $10 in premium. So you're actually breaking even at $90. Whereas a stockholder is losing money, he's down $1,000. You are actually going to be right here at $0. And in fact, if the stock goes down to $80, right? So let's say 80 right here. As a stockholder, right, you have now lost $2,000 because $100 minus 80 is 20 and 20 times 100 shares is negative $2,000. So as a stockholder, you know, you're pretty much hurt here. You're losing $2,000. You should be really upset, right? But as a put option seller, you actually have a bigger buffer. You actually have a margin of safety. So even if it goes down to $80, because you've collected $10, you're actually only going to be right here. You're only losing $10. This chart is going to be right here. And that's because you have collected $10. So even when it goes down to 80, you have 80 plus $10. If it goes down to 70, you have 70 plus $10. If it went down to 70 as a stockholder, you'd be down 3,000. You'd be off the chart right here. But as a put option seller, you're going to be right here, okay? So you're always better off selling a put option than a stock holder, okay? Because you've collected some premium. You're always better off, and these two lines are going to be parallel. However, now let me show you the downside of selling a put option, and I wouldn't really call this a downside. The real downside here is that you lose some opportunity. You can't actually lose any money, at least not in relation to the stockholder. You're always better off than the stockholder, but you're going to be worse off than the stockholder if this stock ends up going up a lot. But it actually has to go up a whole lot. For example, I'll show you that break-even point where you will not make any more money than a stockholder. Right here, you see that we've collected $10. Well, we can't actually collect any more money than $10. It's not like we can go ahead and sell more options. We could, that's going to cost more money. Let's just pretend we can only sell one put option. Now, in this example, because we've sold this for $10, that's the maximum amount of money we can make. We can't make any more money. So at $110, it's actually still going to be $10. At $120, it's going to be still $10. At $130, it's still going to be $10, and so on. Actually, this put option looks like this, okay? It cannot make any more money. So this line is not going to go up. Now, right here is your break-even point, okay? This break-even point is $110. When the stock is worth $110, this is basically your max profit. You cannot make any more money as a put option seller because if it goes to $130 per share, well, you're still only making $10, where a stockholder is going to be somewhere right here, right? He can make $3,000, but you're capped at $1,000. However, selling a put option has so many advantages because let's say that Apple stock is very sturdy and it's very stable and it usually doesn't pop up that much more above $110. Let's say using technical analysis, you see that the upper range is $110. And even if it's not, it doesn't really matter because the point of the matter is that selling a put option is much safer on the downside. You're going to be better off than someone holding the stock all the time except when the stock goes above $110. Now, it's not like you're losing money, you're still making the difference right here. This whole area right here is going to be $1,000. So you're still making $1,000, but you just don't have the upside. You're selling your upside. And because you're selling your upside, you're collecting a premium that is creating a margin of safety for you. Now you have a huge margin of safety. You're much safer than a stockholder, but you've given up some upside potential. Now let me tell you what's going to happen as this option approaches expiration. So in the very beginning, as I mentioned in the beginning of this video, is when you sell this put option, it's going to show a negative balance in your account. It's going to seem like you haven't made any money. Although your account will now have a debit of $1,000 in the cash balance, you do have a negative $1,000 in your account positions because now you have an option that you would need to buy back to close it at that moment. However, as this option approaches expiration, as it approaches this 90 days, the end of the 90 days, let's say 1 month in, this option is no longer going to be worth $10. It might be only worth $6. And if it's worth $6, you can actually go ahead and close this position, buy it back for $6, and there you go, you made a profit of $4 because you've originally sold it for $10, but you can just go ahead and buy it back for $6. Well, you can choose to buy it back at any time you wish. So for example, you can buy it back for $2 and pocket the difference of $10 minus $2. Now you have a profit of $8, or actually $800. Or you can wait for this option to go all the way to the 90th day on that Friday. And if it's out of the money, if Apple is going to be $100 or more, even if it's worth $100.02, that is going to be an out of the money option. That option is going to be worthless when it expires and you're going to collect, or actually better yet said, you're going to keep that $1,000 that you have originally, which you keep no matter what. But now in your account, the position is going to be worthless. It's going to be zero. So now you have $10 that you've collected or $1,000 in your account that you've had 90 days ago. But today you no longer have an obligation. That option is going to expire. And now you've actually completed that $1,000 and it's officially yours. It's always going to be yours, but during that whole process before that option expires, you are going to have to buy it back for a certain price until that option actually expires. Once it expires, well, there's no more obligations in your account, and you can actually run this strategy again. So every single 90 days in this example, you can go ahead, sell another put option, again, collect $1,000 on a quarterly basis every 90 days. Now, on my account, I'm typically doing this between 1 week to 1 month. All right, guys, we're gonna take a look at my portfolio. I wanna show you some selling put examples. So I have a lot of selling puts in my portfolio currently. As you can see, I'm up $238 on Amazon. I have an NVIDIA put that I've sold. I have sold puts on Apple that I'm also up on. Facebook, I'm slightly down on. And if we keep scrolling down, I have a Tesla put option, and that is pretty much it. So let me show you an example of selling a put option. I'm going to show you using a stock, as well as actually showing you some fundamentals and technicals of a stock that I would do this on. Now, I'm going to pick a cheap stock because I know a lot of people out there, you may want to use a cheaper stock because it's a lot less commitment. I mean, if you're selling a put on Tesla, that's going to be a $90,000 commitment. However, if you're selling a put option on Palantir, that's only a $900 commitment. So I'm going to click the chart right now. I'm going to do some technical analysis on this ticker right here. And as you will notice, if I go to the 3-month chart, you will see that Palantir is right at the bottom of the Bollinger Band. This yellow area right here is a Bollinger Band. It's very important because it basically tells you what range a stock is likely to trade within based on statistics. So this Bollinger Band, I usually set it to 2 standard deviations, and all that means is basically 2 standard deviations is like 99% of the time what's going to happen. And this is based on a bell curve. You don't have to be an expert there, but basically this is a very important indicator. We're at the bottom of that indicator. The moving average is $12, so I believe that Palantir is very, very cheap. Now the entire market is selling off, but for Palantir, I think this is at least a $10 stock. Nonetheless, we're just going to sell a put option here. I think it's really cheap. On the 3-month chart, it's at the very bottom. If I go to the 1-month chart, it's also at a 52-week low. So that's a very good indicator that 52-week low, below the moving average, bottom of the Bollinger Band. I mean, there's so many factors here that I'm looking at. And one thing that I could actually include is the RSI. This is the strength index. Now, if this RSI is going to be under 30 or around 30, and it's 32. So this is really good stuff. I mean, all the reasons for me to pretty much sell a put option on Palantir because it's already pretty cheap. And remember, selling a put option is a fairly bullish strategy, or at least it's a neutral strategy. You want to make sure that the stock does not fall. So now we have determined that Palantir is a good buy around these levels. Around $9.48 would be a fantastic buy, as it is a 52-week low. Now, I do have a $10 call option. I'm running a different strategy. I'm actually running the wheel and covered calls. I can link those 2 videos below in the description. But first, let's go to PLTR right now and analyze how I would pick a strike price, as well as the date, and how I would actually execute selling a put option, and then how I would get out of the trade. Now, again, going back here, we're at a 52-week low, so I do not mind being aggressive with picking that strike price. So I'm going to click Trade Palantir Options, and I'm going to go for an aggressive strike price. And the reason is because we're already at a 52-week low. I would love to own Palantir at these levels. So right at the money, and basically an at the money option means, you know, the current stock price is $9.51. At the money means we're right there at $9.50. So right here, and I'm going to pick an expiration date. I want at least 2 weeks out. If you're watching this in the future, make sure that you use a put option for at least a week or 2 weeks out. I don't like day trading put options, although I do that on occasion. I usually like to go 1 or 2 weeks out. Now, May 13th would be good, but I want to give some time for you YouTube viewers to potentially open up a similar trade if you're interested in it. So clicking May 20. May 20 is actually 2 weeks out, okay? So now I'm going to go down. I'm going to sell the $9.50 strike. Now, if you'll notice right here, the premium is actually 92 cents, or really, because each option is 100 shares, this is $92 on just $950. So if I click right here, Robinhood's going to open up this drop down, and you'll see here that I'm risking $92. And basically, this isn't even true. The max loss is not $8.58. It is if the stock were to go down to 0, but if you don't mind owning the stock and you actually like this stock, this is actually, by the way, a prerequisite. Whenever you're selling put options, make sure you're doing it on a stock you don't mind owning. So if you want to own Palantir or whatever stock, right, and you do actually get put to shares, I wouldn't even consider it as a loss because you wanted to buy anyway. So in my opinion, this max loss is a 0. You don't have any loss. All you really have are 2 events. Either you collect $92 and Palantir stays above $9.50, you don't get assigned the 100 shares, or it'll go below $9.50 and you will get assigned the shares, but you don't have a problem owning Palantir. And at that point, you'd be happy to hold this stock into the future because, you know, whatever stock you're selling puts on, basically you're bullish, or at least moderately bullish on that company. So again, $92 is over 10% versus what you actually have to invest. So to run this strategy, you only need $858 and you're collecting $92 in 2 weeks. So can you imagine if you had $8,500? This would be almost $1,000 every 2 weeks, which is $2,000 a month. Really easy to actually get to some decent income where you're trading full time. You're making a full-time income and surviving based off of option trading. Now, this is a super passive income stream because once you sell, you don't really have to do anything. So what I usually do is I will wait until, say, May 20th. I'll wait until the very last day to see if this option is still out of the money. If the stock is still out of the money, fantastic. I'll let it expire. I will keep my 92. I keep it anyways, but I will no longer have an obligation in my account. And that following Monday, May 23rd, I'm going to be selling another put option on this stock or another stock and basically rolling my money into more selling put options and just continuously run that strategy. And that's how I built my big account. If you want to see everything I'm trading, buying and selling, why I'm doing it, the support and the resistance lines, and have access to a spreadsheet with all my trades where I'm up over 50% in the past 9 months, there is an application to our private Discord community in the description. Make sure you check it out. Hope you enjoyed this video. See you in the next one.